Welcome to another beginner's video session when it comes to Options 101. In these episodes, what we do is we go ahead and look at beginner option concepts. And in today's video, we're going to take a look at option trading and how it actually can be a little less risky than trading a stock. And you might have had a friend out there that says, oh no, don't trade options. It's super risky. It's high risk. You don't want to do that. Just trade stocks or long invest. But the fact is options trading, if you know what you're doing, can actually be less risky than trading a stock. And I'm going to share with you some insights on this and why that's the case. Now, if you're brand new to trading options, I highly encourage you to check out our website at tradersfly.com. There's a lot to learn there. You can even book a 20-minute call with me. Check out the books, courses, and other material if you really want to get more knowledge and insight. So let's go ahead and kick things off. I'm going to go into the thinkorswim platform. So this is TD Ameritrade's platform. And the reason I like this is to teach people kind of a risk analysis and show them on the risk profile as a picture, a way to show the risk. So when we go in and take a look at this, we can go into all these different stock positions. I'm going to go ahead and pull up Lowe's. So with Lowe's here, what I've got is I've got a stock price around $232.11. So that means capital-wise, it should cost me $23,211 to buy 100 shares of stock, right? So in this case, what's happening is I'm paying up about $23,000 to buy this stock. Now, depending on your account type, you actually might pay a little bit less. In this case, the buying power affects 11 for me, but it will vary from one account to another. But in most accounts, it'll be about 23 grand. Now, when it comes to the way this makes money or loses money, this is known as a risk profile picture. So the stock price is down here. So as the stock goes up or down, let's say it goes up, you might hit this point here. So now you've got a stock price up here, and then you move over to the left side, and now you've got your profit point, okay? So what it's doing is charting the risk of the stock price relative to the profit and loss. And here is our zero line where we buy the stock. So that's where we bought the stock. If it goes up, we make money. If it goes down, we actually lose money. So as we look at this risk profile picture, you can see we're putting on a lot of money to control 100 shares of stock. And if it goes down, we lose money. If it goes up, we make money. Now, we can do a very similar thing on the option side. I'm going to go and re-put this position on for you. I can go 30 days out. So this is August 11th here. So we could go to August, 30 days out. And we could actually buy, let's say, a 25 delta option, which is like 25 shares of stock. Could buy that option and now have exposure to 100 shares of stock. Now, the problem is these do not behave as fast as 100 shares of stock. I've only got 26 delta. So it's kind of like saying I've only got the muscle of 26 shares. I don't have a lot of muscle power here. So when it moves up, I only make about $26 instead of 100. But to have control over 100 shares of stock, it only cost me $207. That's fantastic and a really good price relative to them paying $22,000. So it's quite a bit cheaper when you really look at it dollars for dollars. The problem is, well, when it comes to options trading, what happens is you actually lose money from time decay. So there's a thing called theta, and in this case, I've got this theta right here, that I'm losing about $6 a day every day that stock stands still, or that option stands still. So what we need is this white line, which is now we've got two lines. That white line is today. The green line's at expiration. It gets closer and closer to the green line, but we're losing $6 a day. So if I go in and actually start moving this date forward, you can see I'm losing more money here on our profit and loss. And if you look at just the line here, let's zoom out a little bit, you can see that that white line gets closer and closer. And with time, that option may be worth nothing at the end of it. And that's a little bit of the dangers with options. But what you could do is when it comes to option trading, the good news is, remember, you are using less capital when it comes to doing the option trade to still have 100 shares of stock controlled. But how do we flip this game around? We can actually flip it around by using less capital and still have time decay working in our favor with the option trade. So here's how we can do that. We can do something like this with, let's say, we can sell a vertical put spread right here And now we've got a bullish construction on the stock. And if it stands still, I still make money. See, for most people, if you go ahead and do the option trade, they're losing money because they're buying singles. In our case, we're actually selling a vertical spread, so it's a little more complicated. It's beyond like the general basics. But what we're doing is we're actually setting things up for time decay to work in our favor. With the stock, what happens is you need that stock to move up for it to make money. So if I look at the stock position, I got to get it to move, and I got to get it to move in my direction. If it stands still, I don't make any money unless I'm getting a dividend. With the option side, what happens here is if it stands still, I still profit, and I'm making about $1.44 or $1.64 per day just from it standing still. And with time, I make a total of $65. And you might say, that's not enough. But look at the risk you're taking on. You're only putting up $435 to make $65. Think about that in terms of percentage basis. So if we look at this from a percentage, we're making $65 on 435. Okay, we're actually making about 14% in 30 days. How bad is that? So if you actually put in, let's say 23 grand worth, just kind of like the same way we would do with the stock position, let's say you did the same amount of capital or so, okay, on a percentage basis. So here's about 24 grand. So let's do a little less. There's about 23 grand. You're actually looking to come out with $3,445, even if the stock stands still. So I'm looking at this lower left over here at expiration. You could come out with about $3,000 even if the stock stands still. For you to make that same amount on the stock, that stock has to go up, let's say over here to 267 from 231. So it needs to go almost about 35, 36 points or so for you to make that same amount of money. So when you think about that, with an option, the stock could stand still, it could move up, or even pull back slightly, and you still make the same amount. And this is where the option is actually less risky if you know how to construct it. Now, the thing is most people, they buy singles, and when you buy a single, that can actually be a little more dangerous, and that could be a bit of a problem. So I highly encourage you to kind of continue your education and continue to learn. And if you want to learn more, definitely check out tradingwebinars.co. And when you go there on this website, what you'll learn is you'll learn kind of the basics behind option trading. It's absolutely free. Just sign up for the little free mini video course. It's like a little webinar, and you'll learn a lot more when it comes to trading options and getting started with it the right way. You can also book a free 20-minute call with me as well, and check out some of the other courses, material, and other things on there. There's a bunch of stuff that's free. There's a few paid things as well, and it really just comes down to, hey, how serious and how motivated you are in your education. But at least check out some of the free stuff, grab it, understand it, and continue to evolve and grow your mind as you continue to learn more about options trading. Because what you can do is construct spreads and strategies that are a lot cheaper, cost effective, and risk less money to be able to build out a portfolio that's very similar to buying hundreds of shares of stock. And that's a great position to be in. Anyways, thanks for joining me. I hope this helps. Truly appreciate it. Feel free to check out all the links in the description. There's a lot of great goodies, freebies, and much more. And I will see you in the next video.